If you look at where the US dollar is right now, the dollar is heading for a collapse, folks. And we've been warning you about it for a number of months here. A number of my close friends who are economists, who are very big investors, have been warning about this for a long time. The dollar is losing its value. The way that the federal government is spending money and printing money, devaluing the currency. So what do we have news overnight? Well, we've got Goldman Sachs. They have now downgraded the US dollar and they're upgrading gold. This is a big deal, folks. Goldman now says that they see gold going up to $1,700, $1,800, $1,900 in value. This is a huge deal. And why? All against the backdrop of the dollar, because the dollar has sinking and sinking and sinking at 3-month lows as the Fed just keeps easing policy, keeps basically printing money. So I want to be clear about how the Fed actually works in this. You know, the Fed creates money through their open market operations. They purchase securities in the market using new money, or they buy by creating bank reserves. They issue that out to commercial banks. Bank reserves are then multiplied through what's called the fractional reserve banking system. For those of you that don't know what the fractional reserve banking system is, that means that if I give the bank $100, I put $100 into the bank, then that means that $10 is all that needed to remain in the bank, and they could then lend that $190 out in the terms of mortgages and other things. Under the CARES Act, that was eliminated. They don't even have to keep $10 in the bank anymore. So the US cash system is just collapsing. The value of it is collapsing against the yen, the Swiss franc, the euro. By the way, this news this week, the euro went up, the Swiss franc went up, the yen went up. Japan is in a recession. The dollar is falling fast compared to all of these other currencies. Very important to understand that this is happening, and it's very troubling. And don't be fooled by what happened just the other day, which is that the dollar went up just a little bit. And the only reason the value of that dollar went up a little bit, and please don't be fooled by this, is because suddenly the Federal Reserve's balance sheets dropped by about $74 billion. Their balance sheet dropped a little bit, and there was some excitement among some investors. They thought, oh, this is a good opportunity for us to buy up some dollars as a safe investment, as a safe harbor for our cash right now. That's only because the balance sheet dropped just a little bit. But that's going to go back up because the Federal Reserve is buying up $80 billion per month of these corporate junk bonds and all of these other packages, and that's going to continue for the next 2 years. So this is going to continue and continue and continue. So don't be fooled by that little blip we saw last week. Investors were sort of temporarily looking for a place to park their money. But I want to play a little sound now from economist Wayne Gordon, because he had some insights on I want you to listen to 3 big pieces that he calls out about gold as it relates to the US dollar right now.
We've had a forecast of about 1,800 for quite some time now. And I suppose the upside risk case to gold is around that sort of 1,900 to 2,000. But I want to bring it back to first principles when it comes to gold. The key drivers for gold are generally 3 things. Market sentiment, the real US interest rate, and the broad dollar.
Okay, did you hear that? The 3 things that drive gold prices. 3 things. Sentiment, the US dollar, okay, and the inflation rate. 2 out of 3 of those things, well, actually 3 out of 3 of those things right now are driving these gold prices. It's not just the 2 of them, the US dollar or inflation. It's also US sentiment right now about this. So that's why we're looking to see gold going up, up to about $1,900. It's right around $1,700 right now per troy ounce. So if you're thinking about, Grover, if you're thinking about investing right now, you want to be looking at gold, silver, and precious metals. Gold, silver, and precious metals are the place that have always been a safe harbor for thousands of years, 4,000 years. It's a safe harbor against inflation. It's a safe harbor against governments printing money. That's why so many of these governments right now have been buying it up. Chinese government has been buying it up like crazy. Their gold reserves have skyrocketed. But the US dollar is not backed by anything. So it's very important to remember that the US dollar is only backed by the full faith and credit of the United States government, and what the Fed does by purchasing securities and how much money and liquidity they put into the marketplace. When Goldman Sachs downgrades the dollar once again, and if your retirement is tied to that dollar, you need to get your head examined. You need to seriously consider getting your money into gold, silver, or real estate. Now remember, real estate has long been a hedge against inflation. When you have an inflation rate of about 2%, and you have real estate that even on a lowly appreciating area is going up 3 to 4%, you got a 2% differential. It's ahead of inflation. And home prices are continuing to go up. Not only that as a hedge against inflation, but you also get the cash flow from real estate as an investment. You get the tax benefits of real estate on your income taxes, claiming depreciation. So you get all of these extra components. Gold as well, it's a real asset that has held its value for thousands of years. That's not going anywhere. So we can mine for additional gold, we can try to find it, but the bottom line is we have a general sense of how much currency, how much gold is in the marketplace, how much silver is in the marketplace. I would check out JM Bullion. Many of you have asked me, where do I buy gold? jmbullion.com is a good place to go and check that out. And if you're gonna buy gold, buy real gold. Gold American Eagle coins and the silver coins. And they'll ship them to your house. Don't buy paper gold. Don't buy stocks in gold. Buy actual gold. Buy actual silver. Yes, they'll ship it to your house. You got to get a safe. Keep it safe. And I frankly wouldn't be putting it into the banking system. I wouldn't be getting a safety deposit box. Because what if there's a run on the banks? Again, the banks all tied to this US currency system. So I would have that in a safe in your house or some other place that's safe that you're protected against. That's what a lot of my really smart, rich investors do. They have massive safes, they're protected, or you can have them put in a security firm that will also protect it, separate from the banking system. So if you don't feel like having it at your house, there are security firms that you can also take it to, like Brinks and other places that will handle that for you. So that's the US dollar.